First of all, most indicators show that China is back in business. Official surveys show that 99% of China's large industries and 84% of small and medium-sized enterprises had reopened by mid-April. Industrial production, a major gauge of factory activities, grew by 3.9% from a year earlier, recovering from a recent drop. That growth rate, by the way, is twice as fast as most economists expected. A silver lining of this pandemic is the expansion of China's digital economy, with online sales, teleconferencing, and online entertainment thriving amid social distancing orders. Before COVID-19, China was already a digital leader, accounting for 45% of global e-commerce transactions. After COVID-19, bricks and mortar retail sales plummeted, but online sales rose 3% in the first 2 months of 2020. Now, back to the big question. What must China do to sustain this economic recovery? How can it balance reopening the economy and preventing the second wave of the outbreak? For more analysis, we have with us Dr. Wang Qian, Managing Director and Chief Economist of Asia Pacific and Global Head of VCMM at Vanguard Investment Strategy Group. Dr. Wang, welcome to our program.
Thank you, Wang Guan.
How do you look at China's economic recovery so far? What will its growth look like in 2020?
I would say, China will get back to, the pre-crisis level in terms of economic activity much quicker, right? So by the end of this year, we should be seeing Chinese economy get back to normal already. Well, if you talk about US or European economies, they are probably only coming back to normal by the end of 2021.
What further stimulus can be expected from China's 2 sessions, and your opinion on China's policy priorities right now?
I think we probably should have a much lower growth target this year. I mean, that would, increase the tolerance for government, tolerance for slower economic growth, because I think the policy here is trying to cushion the downturn, provide, to cushion the downside risk instead of overstimulating the economy. Because I think the past experience has already shown that it's probably too costly to overstimulate, especially over-reliant on the monetary policy front.
Just how important is it? Give a sense of it, when it comes to the role of consumption in boosting the Chinese economy.
So when you look at the U.S. economy, for example, you do see that consumption, household private consumption is about 70% of the overall economy, right? But in China, when we think about the household consumption, it's actually probably less than 40% of the economy, right? So I think there is a lot of potential for China to boost up consumption, in the long term.